Have you ever wished for a bank account that truly understands the dynamic needs of your business, especially when it comes to managing multiple income streams, projects, or even different legal entities? A bank that lets you segment your finances with surgical precision, without the headache of opening multiple traditional bank accounts? If so, you're in for a treat, because today, we're diving deep into Relay, a fintech platform that's changing the game for small businesses and entrepreneurs. And not just changing it, but blowing it wide open by allowing you to create up to 20 checking accounts with incredible ease. Think about it. Many businesses struggle with commingling funds. You have money coming in from various clients, different project expenses, payroll, taxes, and then you're trying to figure out your profit for each line of business, or perhaps saving for a big investment. Traditionally, this means either a messy spreadsheet full of mental accounting, or the cumbersome process of opening separate accounts at different banks, each with its own set of paperwork, minimum balances, and online portals. It's a logistical nightmare that eats into your precious time and can lead to costly errors. But what if there was a way to have a dedicated financial home for every facet of your business, all under one roof, with a crystal clear overview? That's the power of Relay, and that's precisely what we're going to explore today. Before we jump into the how-to, let's set the stage a little more. Why is having multiple checking accounts so beneficial, especially for small to medium-sized businesses, freelancers, and even growing solopreneurs? Firstly, clarity and insights. Imagine you run a digital marketing agency. You might have clients for SEO, clients for social media management, and then you offer web development as a separate service. With dedicated checking accounts, you can see exactly how much revenue each service line generates and how much you're spending on specific tools or contractors for each. This level of granular insight is invaluable for making informed business decisions. You can quickly identify your most profitable services and double down on them, or pinpoint areas where expenses are getting out of hand. Secondly, budgeting and expense management become a breeze. Picture this: you have an account for operational expenses, another for payroll, a third for taxes, and maybe even a fourth dedicated to marketing. When money comes in, you automatically allocate it to these different buckets. This proactive approach to budgeting prevents you from accidentally overspending in one area and ensures you always have funds reserved for critical outgoings like payroll and taxes. No more last-minute scrambles or unpleasant surprises when tax season rolls around. Thirdly, simplified reconciliation and bookkeeping. For anyone who's ever wrestled with a complex bank statement trying to match transactions to categories, you know the pain. With multiple accounts, your bookkeeping becomes significantly more streamlined. If all your marketing expenses go through one account, your bookkeeper, or you, if you're doing it yourself, can easily categorize and reconcile those transactions. This saves time, reduces errors, and makes tax preparation less of a headache. Fourthly, enhanced financial control and fraud prevention. By separating funds, you add an extra layer of security. If one account is compromised, the damage is contained to that specific fund, rather than your entire business capital. It also allows you to be more deliberate about who has access to which funds. Perhaps your marketing manager has access to the marketing account, but not the payroll account. Fifthly, and this is a big one for many businesses, preparing for growth and scalability. As your business expands, you might spin off new divisions, launch new products, or even acquire other businesses. Having the infrastructure in place to easily create and manage separate financial entities within your existing banking relationship is a huge advantage. It means you're not constantly reevaluating your banking needs every time you hit a new growth milestone. So, how does Relay make all of this possible, and specifically, how can you create up to 20 checking accounts? Let's dive into the practical steps. The very first step, of course, is opening a Relay account. This process is remarkably straightforward, especially when compared to traditional banks. You'll head over to Relay's website and begin the application. You'll need some basic business information, including your legal business name, EIN, and details about the business owners. Relay prides itself on a quick and efficient onboarding process, often approving applications within a few business days, if not faster. They are built for modern businesses, which means less red tape and more focus on getting you up and running quickly. Once your Relay account is approved and set up, you'll land on your dashboard. This is where the magic begins. You'll initially have your primary checking account. From here, creating additional checking accounts is incredibly intuitive. You'll typically see an option to add an account or create new account prominently displayed on your main dashboard or within your account settings. Clicking this will initiate the process. Relay will then ask you for a few key pieces of information for your new account. Account name. This is crucial. Give your account a clear, descriptive name that immediately tells you its purpose. Instead of checking account 2, think payroll account, tax savings, marketing budget, project alpha income, or emergency fund. This naming convention is vital for maintaining the clarity we discussed earlier. Account type. While we're focusing on checking accounts, Relay might offer other options in the future. For our purposes today, you'll select checking. Purpose, optional but recommended. Relay often provides a field or a selection of common purposes for the account. This can further help with internal organization and even for their support team if you ever need assistance. Examples might include operating expenses, savings, payroll, client funds, etc. Initial deposit, optional. You can often choose to fund the new account immediately by transferring funds from your primary Relay checking account or an external linked account. Once you've provided this information, you'll typically click Create Account or Confirm. And just like that, within moments, your new checking account will appear on your dashboard alongside your existing accounts. It's that simple. Now, imagine repeating this process. You need an account for your Q3 marketing campaign? Create it. You're launching a new product line? Create a dedicated account for its revenue and expenses. You want to set aside money specifically for your team's annual bonus? Boom, a new account. The beauty is that each of these accounts comes with its own unique account number and routing number, meaning they can function as completely independent financial entities. You can receive direct deposits into them, set up automated payments from them, and even issue dedicated debit cards for specific accounts if needed, which we'll touch on in a moment. With that said, thanks for watching, and until next time.